So far, 2024 has been the year of AI, but is corporate IT spending reflecting that AI boom? Joining us now is John DiFucci, Guggenheim Senior Research Analyst. John, it's good to have you on the show. So you talk about, John, what you see as a new normal for software companies. Walk us through that, John. What do you mean by that?
Yeah, Josh, I think if we look back toward in recent history anyway, even go back 20 years, IT spending's been maybe 2 times or better than that of GDP growth. And software spending is probably better than IT spending. But over the last 2 years, we've seen software spending or IT spending be about what GDP growth has been. And why has that happened? People wonder why is that happening? Is it over? Is tech spending is that not gonna be a high growth area anymore? I don't think that's the case. I think what happened is we had COVID, right? A couple of years ago. We poured money into the economy. Our governments did. Our government, other governments in the world. We spent on IT to get everybody to be able to work remotely. Interest rates were negative, so people had a lot of money, and they ended up spending on a lot of things. They pulled it forward, right? They pulled it back to spend it back in 2021 on things that they would have spent 2-3 years later. So now we have this little bit of a gap. We don't need some of the things we already spent on. Doesn't mean IT is not going to be high growth. It doesn't mean software's not. It's still a great area to be in. But we have to work through this, and we're not done yet. And it doesn't. There was this hope we were going to get this uptick in spending in the second half. We'll get an uptick. We always get a seasonal uptick, but it's not going to be the kind of year-over-year uptick that people had hoped for. Maybe it happens next year. Actually, it's unclear, but that's too far out. It's probably not going to happen in the second half, though.
Well, and John, what was so fascinating to me about your recent report on all of this is that, of course, a lot of the expectations for that boost in software spending has been tied to AI. And you're among the voices that recently, including the folks over at Goldman Sachs, has been sort of questioning the AI narrative, both the timing, the magnitude, even maybe the existence of the huge lift that this sector is going to get. Can you walk us through that part of your thinking?
Yeah, there's been some conjecture out there that AI is the reason why IT spending isn't as robust as people would hope it would be. I don't think that's the case at all. There is spending on AI. And by the way, I believe AI is going to change the world. It's already changing the world, and it will change the world. That doesn't mean that all tech companies are going to be able to monetize that. It doesn't mean they're going to be able to charge for it. They're going to improve their products with AI technologies. And we're going to benefit. We are, all of us, the users. But are they going to be able to charge more for it beyond the uplift they get every year on renewal? A lot of them probably won't. Some areas will. Cloud vendors will. Security vendors probably will, because even the bad guys will have a lot of AI, so there probably will be more attacks. Maybe some of the data preparers, data cleansers will. But that doesn't mean that every company is going to benefit from AI. And I don't think that what's happening out there today is because people are spending on AI, so they're not spending on other areas of tech. For the most part, that's not happening. The people spending on AI are AI companies. Some companies are spending on AI, but they're AI companies, and they're companies that want to provide AI for corporate consumers.
So, John, I'm curious, just giving your kind of broad views there. If you're an investor, you're listening right now, you want to commit capital to those software names. John, what would you suggest? What are some names you prefer here?
Yeah, Josh, I think if you think about where what names are set up well for the second half, they're usually some names that probably had some problems, so the numbers have come down already. For the most part, names they're a little too high. Numbers are too high, and they're probably going to come down for more than half of software names. Some names you can invest in now. A company like Okta. Okta's had a breach or an incident, they call it, a little more than a year ago. Or actually, it's not a year ago. It was back in October. And now their numbers have come down quite a bit, but they're doing really well, and we think it could be one of the best software stocks over the next few years. Another company you can buy, think of what I just said. There is spending on AI. Who's benefiting from that today? Well, Nvidia obviously is, but the cloud vendors are. And well, what cloud vendor may have an advantage in that if they can provide, think about it, you need a lot of data and you need a lot of compute. So all the cloud vendors are going to benefit. What if one of them provided performance at a lower cost, better performance at a lower cost? They might benefit even more. Well, that's Oracle. I think Oracle's our best idea right now.
God, John, thank you so much for joining the show today. I really appreciate it.
Thanks, Josh.